Welcome to Investors Insights. Our topic today, history. Please repeat yourself. You need to watch this entire vlog because it will all make sense. That title, you understand why we chose it. Once you see all the data we're going to present that affects your portfolio strategies as well as your financial blueprint. So I'm honored here as always, and I'm just always amazed when I come out of our early morning meetings. I've got my colleagues, Trey Booth, Bobby Norman, Ty Miller with me. Guys, great research that you did today. Ty, I'd like to start off with you because you hit on a topic that no matter where I go, I'm being asked about it. Uncertainty. Uncertainty in the world, uncertainty in the markets. You did some great research on policy uncertainty and the impact it has on markets. So why don't we start off with you? And then, Trey, I'm coming to you in regards to consumer prices. Everybody needs to know, are we going to see prices going up? And then, Bobby, I will come to you because we'll see if history does repeat itself. All right, Ty, start us off here. Policy uncertainty.
Yeah, we talk a lot about how uncertainty in the market is not something that is typically handled well. Market doesn't enjoy uncertain times. And
people don't either.
Well, people don't either. Absolutely. And so we did a little back testing here. Our research partner, Strategas, has a proprietary policy uncertainty daily index, as you can see in this chart. Yeah. And then we looked at the results. And so first I'll talk about the index itself. So how are they measuring, policy uncertainty? Well, if you see times of 08 and 09, while they did have spikes, they did not reach the heights of, 2001 coming off of 9/11 into an Iran war, or 2020 COVID, or just last year we had a huge reading for the tariff uncertainty, right? And so nobody really knew what was going on with the tariffs, what that was exactly going to be, how much for each country and everything like that. And so that's kind of what we mean by policy uncertainty. It's not necessarily just, the economic environment. It's more or less, what is policy being taken? Why are we doing what we're doing? And are people understanding that?
Yeah.
And so we're starting to reach a level, as you can see in this chart, a little bit over their, again, proprietary index of 500 here. And that is mainly due, of course, to the war in the Middle East, the Strait of Hormuz being closed. And so you can see, again, that we're a little bit over 500 right now, approaching, where we were in COVID and approaching where we were last year with tariffs. So what does that mean for the market? Well, in this chart, you can see the blue bar here. We have the 1 month, 3 month, 6 month, and 12 month returns. And so the blue bar is when the uncertainty is very calm under 100. The green bar in the middle is uncertainty between 100 and 200. And then the red bar on the end is the uncertainty above 200. Again, we're around 500 right now. The interesting part to me was uncertainty above 200 actually leads to outperformance in the 1 month, 3 month, 6 month, and 12 month returns. And so that's very unique that, we always talk about how the market likes certainty, but this chart is kind of telling us that policy uncertainty is kind of the exception, that the market says, hey, this isn't something that might last, this isn't something that should last a while. This is something to take advantage of. Again, that doesn't mean that'll be the case this time, but it's something that we certainly want to keep an eye on.
Yeah, and people talk to us about uncertainty all the time, and I thought that was great insight. And also keep in mind, not only do we have the war in the Mideast, but we also have got the whole scenario of midterm elections and all those things coming at us later this year. And so we're probably going to have more of this uncertainty. And I thought your data just gave a very strong positive that uncertainty actually can work in your favor as an investor or as we navigate through the markets and, portfolio strategies. And then, Trey, I wanted to come to you because we were closed on Friday for Good Friday. And from there, we've got economic data that came out last week, but we're looking at some very important data regarding consumer pricing this week. And that's another question we get hit all the time. Do you think prices are going to increase? Where's inflation? I thought your insight was really good. So share that with our viewers.
Yeah, thanks for getting. So speaking of uncertainty, it takes time to get certainty, right? And these economic reports really help build that.
Well said. I may quote you on that, right?
The downside of them is, though, they're all backwards looking. So if you're certain about something, it's usually something that's already happened. It's hard to be certain about something that's going to happen. But So on Friday, on Good Friday, the markets were closed, but the BLS still put out their monthly report on the jobs market for the month of March, and we got a surprisingly strong number. It would have been interesting to see how markets reacted to that number, but because markets were closed, we didn't get that follow through. But yeah, the private sector added 178,000 jobs in the month of March, which was better than expected. Earnings were up 3.5% year over year. That's also better than expected. But again, all that is backwards looking. So that just kind of says that the economy was in a really strong place coming into the conflict. It doesn't really help us in terms of where it's going now necessarily, but we're watching closely. There are more real-time indicators that do say that we're still in good shape from an economic standpoint. But we're going to get a big data point this Friday that we're watching closely, and that's the Consumer Price Index, CPI, the headline number that everyone talks about. This is what inflation represents. Everyone knows the price of gas is up. But what we're looking at is under the hood where's that flow through? Is that hitting other parts of the economy? Are you already starting to see prices go up? Because everything has to get somewhere via gas usually. And so there is this follow through of higher gas prices. How quickly does that occur? Are companies eating that cost increase because it's so temporary, they view it as temporary, or are they passing that cost along to the consumer? That'll start to show up in the CPI on Friday. So something very important for us to see early on in this conflict, how these additional costs are flowing through. So we're going to get that, and the Fed, I'm sure, will be watching that to see where this goes from here, as well as where interest rates are going to go. So very important data points, strong jobs for March, but where are we seeing prices going forward?
No, prices. My wife Peggy hates for me to go grocery shopping with her or any type of shopping because she's fully aware of prices. In fact, Peggy does a great job watching that. But I'll go, oh my word, look at the price on this now. And she's like, do we have to have a discussion every time on every product you pick up to talk about, oh my word, look at the price. And she's like, can we not just go, it's gone up and we'll talk about it later? Do we have to stand in aisle number 8 and have that discussion? So, I just want our viewers to know I'm not the only one out there going, oh my word, and they're not either. So we're watching that very closely. And so, Bobby, what you talked about today really helped us develop our title, History, Please Repeat Itself. So, we've talked about uncertainty. We've been there before in history. We've talked about consumer prices and inflation and what could happen, and we've been there before in history. And then you brought up a great point about the month of April and seasonality. So history, please repeat yourself. So Bobby, tell us what you think about the month of April.
Yeah, so after a volatile March and a volatile quarter for both the bond and the stock market, we are hoping that seasonality will help bring some relief. And as you can see in this first chart, since 1928, the second quarter has historically been strong for the S&P 500, trailing only the fourth quarter. More specifically, seen in this next chart, the month of April has historically been the second best month of the year for the S&P 500 since 1950, with April being positive 70% of the time. No guarantees, but we like those chances. And so with all the negative news around the market these days, seasonality in April and in the second quarter, in combination with higher tax refunds that we've been alluding to for months, might just be what the market needs to get back on track. So yes, we would love for history to repeat itself with positive market momentum and performance in the month of April and in the second quarter.
Yes, very much so. And I thoroughly enjoyed your report. And, I want to say to our viewers that we're finished with the first quarter of 2026. And here we are now in the first few weeks of April. And it's not going to be dull, but there's a lot of positives out there. And if you sense uncertainty, don't hesitate to give us a call or send us an email to have a discussion. We like to do the Zooms and the in-persons. And the other thing is, all this data is coming in daily to us. We are nerds. We debate, we discuss, and we're looking at it, and we thoroughly enjoy discussing it. So we want to keep you updated. It's also why we do all the social media that we do and the reports that we do, Facebook, Twitter, Instagram, LinkedIn, YouTube, all of this to keep you updated. The month of April We really do hope history, please, please, please repeat yourself. And we'll be able to bring you even more data and hopefully positive news. Resting assured, if it's not looking good, we're going to tell you about that as well. So go and have a great week. Enjoy this month of April. Tax day is quickly approaching, and hopefully all these refunds everybody's getting will be used in this economy. So we thank you again for believing in us and letting us strive every day to see to it that you and our clients have a better, richer, fuller life. Thanks for watching.